Governor of the Bank of Ghana, Dr. Johnson Isiam, has defended the central bank's new regulatory measures, insisting they're designed to safeguard integrity in the financial sector and not stifle market activity. Responding to concerns from some market players, Dr. Siam stressed that the rules are necessary to close loopholes that have long undermined efficiency in Ghana's financial market. One key measure restricts large foreign currency cash withdrawals from corporate accounts. He will also revealed that investigations uncovered worrying practices, including corporations attempting to withdraw as much as $10 million in cash and individuals moving huge sums abroad without proper declaration. Dr. Siama said such actions threaten the stability of the economy and facilitate money laundering. He likened the reforms to enforcing the rules of a soccer match, emphasizing that market must operate within clear boundaries. He also dismissed claims that the Bank of Ghana was acting under political pressure, stressing that the reforms were developed in consultation with banks and aim to restore trust, transparency, and discipline in the financial system. And now let's go to our next story. The Ghana cedi weakened sharply across both interbank and retail forex markets last week as strong corporate demand for dollar met limited foreign exchange inflows, amplifying pressure on the local currency. According to market data, the cedi depreciated by 6.58% against the US dollar, 6.20% against the British pound, and 6.51% against the euro on the interbank market. It closed at 11 Ghana cedis 40 pesos to the dollar, 15 Ghana cedi 40 pesos to the pound, and 13 Ghana cedis 34 pesos to the euro. The retail market showed a similar performance. The local currency lost 5.8% against the dollar, 5.44% against the pound sterling, and 4.53% against the euro, settling at mid-rate of 12 Ghana cedi 50 pesos per US dollar, 16 Ghana cedis 50 pesos per pound, and 13 Ghana cedis 50 pesos per euro. The sharp depreciation trimmed earlier gains, with the cedi's month-on-month performance showing a 7.89% fall against the dollar, and year-to-date appreciation, which stood at 40% in July 2025, has now moderated to 28.95%. Market watchers attribute the weakness to stronger import-driven demand and reduced Forex liquidity. Looking ahead, Databank expects the cedi to remain under pressure as importers increase bids ahead of the festive season. Now into other stories. The Ghana Chamber of Mines has cautioned government against proposals to slash the tenure of mining leases from 30 years to 15 years, warning that the move could harm investment and weaken Ghana's competitiveness in the global mining sector. Presenting the Chamber's position paper on the proposed review of the Minerals and Mining Act, Chief Executive Officer Engineer Dr. Kenneth Ashigbe said mining projects are capital intensive and often require more than a decade of preparatory work before production begins. He stressed that halving lease periods would leave companies with little time to recoup cost, discourage exploration, and reduce long-term community benefit. Dr. Ashigbe further warned that Ghana could become less attractive than peer countries such as Cote d'Ivoire and Burkina Faso, where lease terms are tied to project economics. While welcoming aspect of the review, including the creation of a medium-scale mining tier, the Chamber insisted that the lease tenure and stability agreement remain crucial for sustaining investor confidence, government revenue, and socio-economic development in mining communities. And also our last story for the bulletin, state-owned enterprises, SOEs, posted strong revenue growth in the 2024 financial year, with total earnings reaching 133.68 billion Ghana cedis, representing a 28.3% increase from the 104.19 billion Ghana cedis recorded in 2023. According to the 2024 State Ownership Report, the robust performance was largely driven by the energy subsector, which recorded growth of 38.98%, and financial and allied services, which expanded by 49.52%. Operationally, the SOE sector showed marked improvement, with profit before interest and tax rising sharply to 1.57 billion Ghana cedis in 2024, compared with 376.93 million Ghana cedis in 2023, and a loss of 9.62 billion Ghana cedis in 2022. However, despite the operational turnaround, rising finance costs severely eroded the bottom line. The sector ended the year with a net loss of 9.67 billion Ghana cedis, wider than the 7.14 billion Ghana cedis recorded in 2023. And the report highlighted that excessive finance charges amounting to 9.39 billion Ghana cedis wiped out all operational gains. On the balance sheet, total SOE asset grew by 22.52% to 395.20 billion Ghana cedis, with major contributions from the Electricity Company of Ghana (ECG), Volta River Authority (VRA), and Ghana National Petroleum Corporation (GNPC). Liabilities, however, increased at a faster rate of 24.20%, climbing to 281.94 billion Ghana cedis. The ECG alone accounted for 71 billion Ghana cedis of the liabilities.